Well, buckle your seatbelts. You're in for a wild ride here today. Welcome to the Jim of All Trades channel. I'm Jim, and I'm glad you stopped by. We're going to be looking at Bitcoin and Litecoin primarily today, and I want to just look at this Elliott wave count, but I need to do a couple of minutes of teaching here, just especially for you new arrivals. In my older videos, I shared these, but I need to bring them back because I haven't got the tutorial series done in these yet, and I can't refer you to those videos. Um, but I need to show you a couple of things first, a couple of principles in Elliott wave, as well as in the Fibonacci extensions and understanding how to measure waves. I need to show you that, and then we need to apply that to this market. And I want to show you why the current move is difficult to interpret with any definitive nature. We are in kind of a no man's land in the place on the charts. I'm still looking strongly with a strong potential to the upside still, though temporarily I think we're going to have some more downside, I believe. But I want to show you the things to be looking out for and watching. So I'm personally on the sidelines on my trading right now, and I just want to kind of give you some short term and some long term projections. So you really ought to sit and watch this one. You ought to watch it all the way through. I'm going to share a lot of important thoughts. And if you have any stake in trading this market, you really need to understand some things. Okay, all right. Without that kind of being set, glad you stopped by. If you're brand new to the channel, go ahead and hit subscribe. I give daily Elliott wave calls, as well as trade projections, as well as how to trade this market, and spend a lot of time supporting new traders as well as seasoned traders offering ideas. Our latest trade didn't pan out as we had hoped, but we were prepared. We were prepared to stop that trade out, and if you followed the advice as far as setting stops and whatnot, then you did okay after last night's dump. So if you're new to the channel, go ahead and hit subscribe for me. And if you've been watching the channel for a while but you haven't hit subscribe, would you do that? I'd really appreciate it. It helped me grow the channel. Leave some comments, leave some love in the comments section. Let me know what you think of what you're learning, and go ahead and don't forget about our Litecoin swing traded community. I want to invite you here as well. All right, let's jump in. I want to teach you a couple of things. So we're on the Litecoin chart, but I'm going to move over here to a blank section. I want to show you a couple of things very quickly. I basically have just a couple of tools in my arsenal, really, as we determine what the Elliott wave count is. Elliott wave is more than just counting waves, guys. These waves have to be rightly related to each other. What I mean by that is the measurements of the waves need to be related in proportion to normal and common measurements that happen over and over in the charts. Let me show you what I mean. If I just drew a standard Elliott wave, motive wave right there. That's five waves, right? What we normally do is we want to see, first off, we have a one wave, and that one wave needs to be five waves, okay? The three needs to be five, and the five needs to be five. So these vertical waves need to be five waves. These corrective waves, the two and the four wave, need to be three waves. So that's a basic, that basic principles of Elliott wave. Okay, I need to see five subwaves in here, three subwaves, five subwaves, three subwaves, five. You're gonna be five, three, five, three, five, and that's all. That's all Elliott wave is on the macro and the micro. Because what should follow this is well, daggone it, a three wave move. I kind of put it over there so I can set it there. There we go. So we should see an ABC that follows that. And so that's kind of this is kind of the standard Elliott wave sequence right there. Okay, you need to understand that. Now in the A wave, what you need to understand with that is that there can be five waves in the A, or there could be three waves, either or. Then we always have three waves in the B, and we always have five waves in the C. Now that's a standard zigzag, okay? Now that's a simple correction. Many times you can get what's called a complex correction. This is something else you need to understand as well. You get what's called an X wave. Okay, we're going to make that X wave yellow there. And then what happens is you get another ABC to follow it. Well, I can't move my chart. Let me move everything over here so I can get it on the screen. And when you get a double correction like this, we call it a complex correction. And it makes it more difficult to get, no doubt. But this would be a complex correction. This would be a double zigzag, and we label that W, the first ABC, X, and then Y, and that's the way we label that. And that's something you can get as well. So those are some things you need to understand. Now, how are they related to each other? There's some basic structure to the Elliott wave. You need to understand those things. I'm doing video tutorials coming out very shortly. We're going to start rolling the Elliott wave stuff out next week. As I can make those videos. Now, the one wave and the two wave, how are they related? Well, generally the two wave retraces the one wave anywhere from 50% to 78 to the 786. Those are your typical retracements. Two can often be very deep. What you'll often find as well is two will come all the way down to the bottom of wave one. In fact, with Litecoin and Bitcoin, they do that very often because they want you to believe, the market makers want you to believe that this is going to break this low and continue going down, and they reverse it on you. So that's often the case with two waves. Okay, so but generally the way the two wave is related to the one wave, it'll retrace it between the 50 and the 78% retracement. Okay, that's a pretty normal retracement pattern. So that's how one and two are related to each other. Now, how is the third wave? I'm just going to get rid of this for a minute. How is the third wave related to all what we just said there? Let me move this over here a little bit. Kind of get this a little bit more. There we go. So the way we measure the three wave and its relationship to the one and the two is that we put the fib extension tool on it. So I'm going to put my fib extension. What I just used a minute ago was the fib retracement tool, and we start from the bottom. It's just 2 clicks with the retracement. Start from the beginning of the wave to the top of the wave, and then it gives you a measurement back. So it starts with 0 up here all the way down to 100% down here. And so you can see that this wave comes to the 618, which is or the 0.65, which is the golden zone. This is the area that the most common retracement, the 618 or 61% retracement. Now that's one and two. The three wave is related to the one and the two. So what we do is we use the extension tool, which looks like this on your chart. You'll find it over here. In this list right here, and we look for the trend-based fib extension. I have it in my favorites list. So we click on the bottom of the wave and the top of the wave one. What we've just done with those 2 clicks is we've measured wave one. Now we come to the bottom of wave two because we want to measure this third wave from where it starts, and it starts at the bottom of wave two. So we're measuring the extension of this third wave as it relates to the first wave. And what you can see is that the three wave generally comes to 100% of wave one plus another 61.8%. So we call that the 1618 extension. So the three wave most commonly will come to the 1618 extension. If you have an extended three wave, it will go to the 26. Oh, sorry about that. It'll move to the 2618. What that means is 2 times the one wave plus 61.8%. So an extended third wave will come up here, and they have been known to come up here to the 3618. They're rare, but that happens as well. But we want to see a three wave come at least to the 618. Why is that important? Well, because the most common landing point is 1618. And it is to be differentiated from an ABC. Now I want to show you what an ABC generally looks like. An ABC generally looks like this. It's usually a zigzag. It's usually three waves. And what do you notice? Without any of this, it looks like a 3. It looks like a 1, 2, and a 3. But the difference is between an ABC and a 1, 2, 3 is the extension of wave C. A is usually 5 waves like 1 is. B is always 3 waves like 2 is. And then 3, the C wave is going to be 5 waves, often like always like the 3 wave. So the wave counts are the same between an ABC and a 1, 2, 3. But what you find is that the length of the wave C is different as it relates to wave A. Let's put the extension on that, and I'll show you the most common extension levels for an ABC. The most common extension levels of an ABC generally end at the 1-to-1 extension or the 1-272 or 276 extension. And so an ABC will often be shorter, and it's not going to be long and protracted. So that's a fantastic thing for us. It's a tool that we can use. We can basically we can look at how when this 1 and 2 wave is formed, and then we get a bit of a reversal. What we do is we put our fibs on that and we measure what's going on. And if price comes up here to the 1-to-1 extension and reverses, then we know that we possibly have a C wave on our hand. Doesn't always mean, because it may just bounce off of that and continue higher. But what we want to do is we want to just keep our measurements on our charts so that we can know where we are, whether we're dealing with a corrective wave or a motive wave to the upside. What are the implications then if it's a C wave? Well, if it's an ABC, that means this is corrective, and that means this is going opposite the trend. So an ABC is going opposite the trend, whatever time frame you're using. That means the next wave is going to be a down wave, 5 waves to the downside. If we get a 3 wave, which goes past the 618, we should expect a bit of a retracement and another wave to the upside. And so the measurement of the wave kind of tells us which direction things are heading, and you can know and plan your trades like that. So that's some basic information that many of you know who have been around a while, okay? But many of you don't understand that, and that's important for you to understand. Now, I just want to show you in this chart right here. I'm going to go to the 2-hour. I just want to show you how often this plays out over and over and over again. First off, which way is the trend here? This is LTC, and the trend is going up. That means every wave that goes the opposite of the trend is a corrective wave. And let me show you what we're looking at in these corrective waves. Let's look at this one right here. We have a 1 and a 2, or an A and a B. I want to show you what happens when I measure the top of this wave to the bottom of this wave. That's your 1 wave, okay? And then I put the extension on it. Look at what happened to this wave. Where did it stop? I don't know if you can see it. Let me put it out here. It stopped right here at the 1276 extension, okay? And then it went up again, and then it came down again. So, and then it came down to the 1618. But notice something. If this is an ABC, it came to the 1276 and stopped. Let's see if I can get it here. A, B, C. We ought to be able to count either 3 waves or 5 waves, then 3 waves, then 5 waves. And if I go to the smaller time frames, you will see that. Okay? Now, we have this wave to the upside that follows it. Okay? That looks pretty 3 wave-ish to me. Could be 5 waves, but this is our X wave, most likely. And then what we have is yeah, actually, I'm sorry. This is an ABC, ABC, and then we've got 5 waves to the downside. This is just a large ABC. Sorry about that. Misspoke here. I was thinking that was a WXY. Could still be a WXY. I'm just having a hard time seeing 3 waves here. I see 5 waves in here. Now, if I then put my fibs on this level right here, from this to this. Oh, sorry, I picked the wrong one. This to this. Look where this wave came down to. It came down to the 1-to-1 extension here, pretty much. Make sure my fibs are right on. There we go. See how it came down right next to the 1-to-1 extension? That tells us it's corrective, and you'll find corrective waves measure like that all the time. Let's look at another one. This right here is a corrective wave. Okay. Now this right here didn't break this low, so this is actually a 1-2. So let me just zoom in. You see the 3 waves here? Let's throw the fib extensions here. See how we came down to the 1-to-1 extension and stopped? That's a corrective wave. If it had come down here, we would have said, oh, we got a reversal. But that's a corrective wave. It bounced off and we kept going. That's how we knew that we had a reversal here, and that would have been a good trade here. Let's look at some more. Let's look at some more corrections. We got one right here. Actually, it's right here. So let's zoom in a little bit. Kind of change the shape of the, so you can see the wave delineation there. There's your first wave. There's your second wave there. Now this one didn't quite, it almost came to the 1-to-1 extension, didn't quite make it all the way down, but came really, really close. Again, corrective wave. And I could just keep going down through the chart over and over and over again, showing you that pattern, how corrective waves are to the 1276. Now let me show you some 3 waves, okay? Look here. If I measure this 1 wave here down to the 2 wave, you can see how this one almost came up to the 1618, but this one passed as well. So I'm thinking this was the 3 wave here. This one is hard to count, but I'm thinking this is 1, 2, 1, 2, 3, 4, 5. That's the 3 wave right there. 4, and this is an extended 5th, and that's the way I'm counting. Counting that. That's a really tough one. The other option for counting this one. I was like, where's my chart? The other option is that this is the 3 wave. It came all the way up to the 2618. This wave was an extremely hard wave to count. But you can see how this wave was a lot longer and it came past that 276 extension. So let's find one that wasn't so hard. Let's find one of these intermediate 3 waves, like right here. Let's measure that guy. See how we've got a 1, 2, and then we got this. It came up to the 2618. So this is a 1, 2, 3. It's an extended 3rd wave, 4, and 5. So yeah, I think that's why I was calling this the 3 wave earlier in my counts. Let's see, that wave was fairly difficult. Shoot, this wave is difficult as well. LTC was just super difficult on the way up. But I guess I'm just showing you the differentiation between the 1276 stopping point and here's the 1 wave. Let's look at that. Let's try this 2 wave here. See how we have 1, 2. We came up and tagged the 2618. There's an extended 3rd wave. 4 and then 5. We got some kind of wave delineation here, and it starts another wave here. So you can just kind of see how the motive waves go beyond, well beyond that 276, but the corrective waves, they stop at the 1276 or the 1-to-1 extension. So that's something you just need to see over and over and over again. Here, let's check out this wave right here. See how this wave came right down to the 1276 at $65. I mean, it's just right to the tick, and so that's how we nailed the bottom of this wave, and we were calling that as it was coming down. All right, so with that in play, those are our tools in our arsenal. Okay, now I'm more concerned about wave shape and how it measures than I am worried about being able to count all the waves inside the waves. Now, some people would say, no, that's wrong. But personally, I've found that the market makers do their best to conceal what they're doing. And so even though sometimes we can't count the waves properly, we see shape and measurement, and then we go by that, and we make good decisions based on that. So let's just take a peek here. Let me show you why this is so hard. Since this is going against the trend is up. This is a large correction, okay, based upon this entire move. That's what I've digging into. So this is like a large 1 wave followed by a large 2 wave. So we should expect then, let me get this out of the way here. We should expect a retracement then from the bottom of 1, top of 5. We should expect the 2 wave to come down here to the 618 It's come down to the 50%. Is it going to come any lower? We had a bounce off the 50%, and it makes sense why we have structure here, and we've got fib levels here. And so we traded this. We called the $80 bottom roughly, and then I was calling it from the fib extensions, and we traded this up, and then exited, and then we waited, and then we entered back in, because my hypothesis was that we're dealing with an A, B, C. Because I believe we're going to come down for another wave. I think this is a big A wave. This is, or actually a big ABC, followed by an X wave, and then an ABC. That is what my working hypothesis is. So this doesn't look large enough and complex enough for all of this, and I'm thinking that this is just the beginning of our correction. We are going to have an up move, and I've been trading it for that, and then we're going to have an up move up here somewhere, and then we're going to come back down here. That's what I'm thinking, and that's what I believe could happen. So let me show you how this wave extension plays out. Now, right up here, this looks like a one wave followed by a two. Excuse me. Or the only problem I have with that is I only see three waves here. So that makes me dig into that a little bit more, and maybe that's a three wave. Maybe that is an A wave followed by a B wave, which means this would be C. So if I put the fibs on that, I should expect that to be the 1276. And look where we came down to. Let's see, get it right on it. This 1-2 actually came down to the 1618. So is this a three wave? Well, I should see five waves in that three wave, and the third wave is usually very good about showing us five waves. So whatever this is, I've got a clear wave change right here. We got a wave, and then a wave, and then this is the beginning of a new wave. So I've got 1, 2. This looks like it could be 3, 4, 5. Now, this is the problem I'm having. If this is, so let me zoom in here. In all of the subwaves, they should also measure as well. So if this is a 1, 2 of the third, okay, let me go back. If this is this could be five waves here. 1, 2, 3, 4, 5. I do see them there, but the 4 and the 5 are harder to see. This could be 2, and this could be 3. I need to see 1, 2, 3, 4, 5. So we should be able to put the fibs on this 1, 2 and see if this third wave comes down to the 1618. There's my problem with that. The three wave does not make it down even to the 1276. It makes me believe that this is the third wave of the third wave, that we're actually dealing with a 1, 2, 3, 4, and this is the fifth wave of the third, which wouldn't make sense to me because the way I'm counting it, because man, that would let me show you why. Let me go to the daily here just to, I mean, if this is a 1, 2, 3, and the 3 isn't finished, but we got to come down for a fifth wave of the third, and then we got to go up for 4 and then down for 5. Y'all, I mean, you know what that's putting our end of our wave? Golly. That's putting our end of our first A wave. That's just 5 waves, and that would be an A wave at $57. That's where I would expect the end of the correction to be. So while I want to say that, well, maybe this is, a 1, 2, and then this is 3, I don't see the 5 waves delineated here clearly that measure properly. So that's a problem I have here. Secondly, it would mean that our wave would come so far down here. I mean, the implications of that are pretty bad, y'all. Here's what we'd be looking at. This would be 5 waves to the downside, finishing at about $57. And that would be our A wave. We'd be coming up for B, then we'd be going down for C. Where would we expect C to come down to? Well, that's not drawn very well, but let's see. The one-to-one extension is right here at $30. Is that what we're looking at? I don't think so. I just, I have a hard time buying that. So while I'm trying to offer that as a potential count, I'm having a hard time seeing this as 5 waves to the downside. Because if that means 5 waves to the downside, guys, we are going low. Because if that's 5 waves, it has to be followed by 3 waves, okay, and then another 5 waves. So I don't think that's happening. That's why I kind of reject that as a potential. What else could be happening? Well, I think that this is ABC, and we simply have a deep C wave. That's what I think is happening. It measures, it only comes down and tags the 1618. It doesn't go past it. So this is what I think. You see how when I put the fibs here, it doesn't quite make the 1618. It goes through the 1276, but it doesn't quite make the 1618. Let me go to the 6 hour. Let me go to the 6 hour here. How about the 4 hour? So we can get a little bit more detail. I think this is an A wave followed by a B, and then we have 1, 2, 3, 4, 5, and that measures correctively, and I like that a lot better. So that means what we have here is a reversal wave, and I believe it's a 5 wave move. Okay, so now we're moving. So now what I'm now entertaining is that this was ABC. Okay, and that's what I think, and I've given you the reasons why I think that. I'm not ruling out that we have 5 waves being made. Now, here's the deal. If this wave ends up coming down and breaking this low, we need a yellow line of death here. And we need a real yellow line of death here, guys. So we're going to put a massive yellow line of death right here. If we come down and break that low right there, the scenario that I just gave you is very much in play. We might be looking at a $30, $20, or even lower bottom. We might be looking at a double bottom here. So, so yeah, I just want you to understand that that's a potential. I don't think it to be. So what's our next scenario? Our next scenario is that we have an ABC. This is our C wave. Okay, we've got A, B, and C. Or this is a ABC followed by ABC. And now we have an ABC, and I like that even better. That would be a large WXY. Okay. Now, what this could be then, if that's the case, is we have a WXY. We could either be done. Okay, I want you to understand that could be finished. Correction's over. This was a 1 wave. You say, Jim, what about the dump that we had last night? It doesn't bother me. It doesn't bother me a bit. Let me show you why it doesn't bother me. Let's zoom in and look at what we're looking at here. I know that this video is kind of going a long time, but guys, you've got this is where we are in the charts. This is how I think about Elliott Wave, and this is designed for teaching, as well as so that you guys can really make good decisions. And if you're going to make good decisions trading, you're not just looking for numbers from me. You need to understand what's going on and the potentials that are out there. So I need to take my time helping you guys understand. Okay, so please. So this right here looks like a 1, 2. Let's measure it and see what we got. We got a 1 and a 2. You can see how this wave came up to the 3618. We had a move down, and then we moved up. So this is a 1, 2, 3 wave. Okay, that's not a corrective wave. That's not ABC, because it look how far it extended past the 1276. This is a motive wave. This is a 3618. That's a very extended third wave. 1, 2, 3. 4. Okay, now we have a 1, 2, 3, 4, and a 5 wave right there. So this is what we're going to call an extended fifth wave. Extended fifth waves generally end at the 1-to-1 extension. Let's see what happens here. If we measure here to the third wave down to the 4, I want you to notice where the top of the fifth wave ends. A very common landing point for an extended fifth wave is the 1-to-1 extension, which is why I've called this a motive wave. I've been looking for a correction down. Now, this correction needs to come at least, this is be a 2 wave or a B wave, one of the two. Okay, we came down to the 1618 and we tagged it. Then we came up pretty strongly with a reversal, and we thought our trade was going great until this candle that just took out everything. And then it's just been going sideways. And then last night we get this dump. Now, let me ask you a question. How is your psychology right now? How are you feeling? Man, based upon what everybody's talking about in our group, everybody's thinking down, 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 right? Now, why do you think down, down, down? Because the market makers need you to believe down, down, down. Why do they need you to believe that? Because they need to buy they need you to be a willing seller so they can buy up what you have. There's not an unlimited supply here. There's only a limited supply of Litecoin. They have a lot of money. I don't know how much you're trading with, but I'm trading with thousands. I'm not trading with hundreds of thousands and millions. And they've got millions. And imagine how many Litecoin can be bought and how many Litecoin are available to buy with millions of dollars. So they need to take their time in all of these waves, just buy and buy and buy. And they're accumulating right now, buy and buy and buy. Because the chart, to me, is saying up. I readily understand we could be going down, but for me, it just keeps looking up. Now, it might be a short-term up, but it still feels up to me. So we can come all the way down to this yellow line and still go up. I want you to know that. If it comes down to this yellow line and it measures correctively, buddy, I'm a buyer. I am definitely a buyer. I'm a potential buyer here. I'm going to wait and see what I get here. I want to see what kind of reaction I'm getting here. I believe we're going to be coming down a little lower, and I'll dig into this wave in just a minute. But for me, this wave measures too motive-like. The extensions are too long. It measures so well like a motive impulse wave. Okay, so that means we've got a corrective wave. See how choppy this is? See how straight up this was? This is choppy correction, and that's what we get. Now, notice a couple of things about this last dip that we had. We have not broken this low yet. We've not broken it. What could we still have? We still could have a one wave followed by ABC. And this is a complex ABC. Let's dig into that a little bit and see what it measures. Let's go down to the 30-minute chart and see if that looks like an ABC. Let's measure it. Here's our A wave. Or is that our A wave? A, B. Did that make a higher high? It did not. This is A, most likely. B. Look where we have landed. And we've been bouncing all over it. We haven't moved. So, is that the bottom? I don't know. Look what happened when we landed here at the bottom. We had a bit of a wick, went sideways for a while, but then what started happening? Started kind of just going up a little sideways, and then boom, it took off. Except this is going to be a three wave. If this is a motive wave, this is one, this is two, big ugly two, if it is, and then boy, we're going up from there. If this stays here, if it doesn't make a lower low. Let's do the extensions. Where would we go if that's the case? Well, here's the 1618. I don't think we'd stop there, to be honest with you guys. I think we'd be up here at least to the 2618 if I had to guess. We'd be looking at 1, 2, one of those giant moves to the upside, 3, 4, 5. And that looks pretty symmetrical based on that move. Now let's zoom out a little bit more, see where we might be going. Now, this could be an A wave. That's 5 waves. Could be an A wave. This could be B. And then we're coming up here for C. That would be, in our grand scheme, what I believe to be an X wave. So what I'm digging into is what I'm thinking. It's my primary hypothesis right now. So we'd actually end up having, instead of a WXY, we've got a WXYXZ. makes more sense to me. We'd be finishing down here at the $60 mark or so. So right now, my primary thought is that we're heading to the upside first before we come down and finish our correction. What kind of time frame is that looking like? Well, I don't know. But the way, let's just see if I can just draw it based upon um, the angles I'm seeing here. So C wave kind of came this way. Just a guess, guys. Kind of go up here towards the halving and then down. Down here to finish our correction. Kind of see the shape here. Let's go to the daily. Kind of get the angles right here. Mid-September we might bottom out. I'm guessing, just a guess. Just a guess. Might bottom out somewhere beginning of September. That halving might have an initial impact. This might happen around the halving. I forget the date, but it's somewhere mid-August, I think that halving is, and we might get that final push. So we might have a up move on the before it, and then we have a down move, and it might be blamed on the halving, and then we're going to have our bounce to the upside. This will finish our two-wave. We'll have to see. I don't know how deep this is going to come, if it does this at all. Okay, so I mean, this is just a hypothesis, guys. I'm just taking what I'm seeing and saying, okay, this could happen. Remember, what else could happen? We could have 5 waves to the downside. But these are the two scenarios that I'm seeing. We either have 5 waves to the downside, and then we're coming up, and then we're coming down again, and it's going to come really low. Or this is an ABC, and we're going up from here. So how do we know? We're going to know pretty quick. How do we determine what? Because those are, as far as I can tell, the main 2 possibilities that we have here. So how do we know what's going to happen? Well, our yellow lines of death are going to help us. If we break this yellow line of death, it's not going to bother me a whole lot. Okay. So if we break this first line here, our second line of defense and our last line of defense is here. Okay, this will have to finish our 5th wave. So if we break this line, we'd be coming down. Let me see if I can, I think I already gave it to you earlier. About $57 would be the bottom of that wave. Let me show you. There's 1, 2. 65 would be the 3 wave or so, 4, and then we'd be coming down here to about $57 to $60 in that ballpark there to finish out 5 waves if to the down. So if we break both of these, we're going down to about 55 to $60. Okay, but if we turn around from here and we head on up, I believe. Go to the 3-hour. Let's throw the retracement tool on this whole move here. The first WX. Okay, we'd be coming up here to the 618, to the 65, the golden zone there. Let's put the fib extension tool here. If we've already bottomed on this wave and we go up from here, we're looking at the 115 to 123. So that's in this ballpark region right here. So I'm going to just put a box here. Here's a target area. I can't be certain until the waves are delineated more clearly. So here I'm still looking to the upside in this ballpark here. And this would be an ABC X wave. And then we'd be coming down for our Z, which would be another ABC. Oh, all right. I'm tired after this one. I'm gonna stop the video here, I believe, and let me just dig into this one last time with you. This wave that we're currently looking in, and say, okay, what do we see here? See, this is really a hard wave to analyze because what is that? That's just straight stinking down. There's no wave delineation, nothing. That's why we just need kind of the fibs. This stopped at the 1276. Um, if you look at the shape here. Are we getting some kind of shape like that here? Could be. I would say if we kind of come up and then come back down, but we make a higher low here, it might be a good entry for a trade. I'm kind of scared to enter right here. I would be scared at this point. If I was entering down here at 86, I would be, you know, I'd be fine right now. I want some room. I don't want this thing to go down on me. But this looks like we're going to have some upside here. Um, we hit a bottom, we wicked. We're probably going to get some up movement and then a retrace. I would wait for the retrace before you enter. I always wait for black candles before I enter, and just be safe if you want to enter this trade to the upside. But this could be a 1, 2, 3, 4, 5. I can see 5 waves there, and then we would have basically a big ABC here, or how do I do that? How do I say that? This would be A, B, C. Yeah. No, I'm sorry. A. Sorry, I got confused. This would be a big A wave, and then we would have a A, B, C, or WXY, whatever. Uh, if it stops here and doesn't break this low, now if we break this low, we're going down to this target down here. This is the big yellow line of death, okay? Intermediate line of death, the big yellow line of death, okay? So be aware of those things. Let's talk in the swing trading community. Let's share some charts. Let's see what we got. And let's be safe with our trades. Again, this is a very dangerous area to be trading. However, there's really, really good upside coming. I mean, shoot, we're talking $30 move, $25 move here, and potential. So that's a great trade potential. Um, you're trading 100 Litecoin, that's a $2,500 trade. I'd want to be in on that, wouldn't you? And I'm willing to risk a couple of dollars, couple $100 in a stop for that potential. But let's wait and see what this does. I want to see an up move and a retrace that stops at a retracement level of, as I zoom in on the 1 minute chart, I want to see a 1276 bounce, and then we'll jump in on the, on the retrace to the upside. Okay. All right. There's Litecoin for you. I'm going to make a separate video for Bitcoin. That's coming today. All right. Talk to you later.